So Empresaria is an international specialist staffing company that is following a multi-branded strategy to address talent shortages in the global markets.
This is the second year in a row now that we've reported record profit before tax. So our adjusted PBT in 2015 was 7.5 million, and that increased to 9.2 million in 2016. Now that was driven from strong revenue growth that was up 44% year on year. Our net fee income, which is the same as gross profit, was up 20. And we've now seen 14 consecutive quarters of growth in our net fee income. So we're also showing a consistency in our delivery, which is really important. We managed to control our costs. One of our KPIs that we look at is conversion ratio, which is operating profit as a percentage of gross profit. So how efficiently we're turning our gross profit into bottom line return. And that increased again for the fifth year in a row up to 16.6%. So very pleased with that. Our adjusted PBT, as I said, was up 23%, and our adjusted EPS was up 14%, and that's also the fifth year of double-digit percentage growth in that KPI. Now, on a reported level, our EPS was unchanged at 9.3p, and the reason for that is that having made 2 investments in the year, our amortization charge was increased, and therefore that affects the reported EPS. That's why we have a look at the adjusted measure as the main figure that we will report on. We've increased our dividend by 15% up to 1.15p. Now last year we announced that we're following a progressive dividend policy, and what we mean by that is that if we have an increase in our profits, we'll be increasing our dividend, not necessarily in the same quantum, but it's following the same direction. Overall, we are not expecting to be a yield stock. We look at our use of cash across a number of different areas, with paying dividend to shareholders, reducing our debt, and also looking at investment opportunities. So it's important to balance those 3 things, but we are committed to paying out a progressive dividend, hence the increase this year.
The prior year we made an investment in the USA in a company called Pharmaceutical Strategies that places pharma tech professionals into the market. That company has been integrated very nicely in 2016. They've been able to grow their client base, and we're very happy with it growing forward. This year in 2016, we've made 2 investments in brands in exciting sectors with a long-term growth prospect. One company, the first company, was Richwood Aviation, which brings us into the aviation sector, where we lease pilots out to airline companies in Asia Pacific and on the north-south axis of Europe and Africa. The second company that we invested in is Console Partners, which is an IT staffing company. We made that investment in October 2016, and they're operating from London and the US, servicing clients in both the UK and continental Europe and in the United States in highly exciting sectors of the IT staffing industry, which is cloud technology, telecom, mobile, and digitalization.
Our strategy is all about having a balance and diversification by geography and by sector. So that's important to make sure that we don't have all our eggs in one basket and we're mitigating risks in one market or one sector. And we've made good progress by having a better spread across both sector and geography during the year. Another important part of our strategy and business model is to have a bias overall for temporary recruitment as opposed to permanent recruitment. Again, in 2016, we've seen positive movement there, with an overall split of our net fee income of 60% at temporary and 40% at permanent, and that's improved from 55-45 split a year ago. Over the midterm, we're expecting to move that higher and get to about a 70-30 split would be our kind of optimum point going forward.
The strategy so far has delivered good results, so we're on a good track record. So we keep continuing to focus on investing in our existing brands and to develop a future business by making external investments. So in 2014 we defined a 5-year plan, and in this 5-year plan we identified 3 key KPIs. The first KPI is an average growth of 10% per year on our net fee income. The second KPI is a conversion ratio of 20%, where the conversion ratio is the operating profit that we derive from our total net fee income. And the third KPI is a debt-to-debtors ratio of 25%. So we've seen good progress in terms of developing and delivering to these KPIs over the past years. In 2016, we improved on our conversion ratio compared to 2015, and we did a 20% net fee income growth in 2016, opposed to the 10% on average target for 2016. Our debt-to-debtors ratio has moved up to 38%. That's because we made the two investments in 2016 in Richwood and in Console, but we're very confident that we can bring that debt down to the level of 25% by the time we reach 2018.
As an internationally diversified business, currency is always something that we have to pay attention to. Now, most of our group companies operate within their own country, so from a trading point of view, there's very little currency movements. Now, with Richwood and Console joining the group, they have an element of cross-border transactions, so there will be currency movements in the future. But for 2016, there hasn't been any group impact on our P&L from a trading point of view. Where we have seen currency impacting is on the translation of our group results back into sterling. As Joost mentioned, 68% of our group is outside the UK, and when we bring their results back into sterling for group reporting, we obviously have a currency impact depending on what's happened with exchange rates. With our adjusted profit before tax, the reported increase was 23%, but even on a constant currency basis, we still saw 11% growth.
To conclude, we posted a second consecutive year of record profits in 2016. We will continue in 2017 to de-risk the business further. And in 2017, we will see the full benefit coming in from Richwood and Console combined with organic growth of our other brands, all adding up to confidence that we have as a group in terms of hitting targets of 2017 and deliver future profitable growth.